Hello everyone and welcome to another edition of the Forex Technical Market Update. Okay, we are in the month of February and I hope everyone had a very good January, and it's now time to focus on what will be happening in the month of February with the currencies. Now the currencies have been, especially the euro, has been declining very steadily against the US dollar. Now the question is, where will this decline end? Because as for you traders out there and experienced traders should know that declines don't go on forever and ever and ever. At some point the market will retrace, and I have a feeling when the market does retrace, it will be a pretty significant retracement upwards. Okay, so where will this market end? Now, one of the things I do like to look at is where are the monthly pivot points, and because we had a strong downward move upward, a strong downward moves last month, the monthly pivot points are very exaggerated, but we have a monthly S1 of 108 and a monthly S2 of 104. Resistance is at 118 and 125. Very wide range in for the pivot points, but I suspect the high will be somewhere near the 118 120 level if we get up that high, and the market could stay between 108 and the 118 level, which will be the monthly S1 and the monthly R1 in the euro. Currently the market is still on a downward trend, and we cannot ignore the fact that the market is still in a downtrend, and in a downtrend it's better to look for selling opportunities rather than buying opportunities. Well, as trend traders, it's better to look at selling opportunities rather than buying opportunities in this market. So the euro is still in a pretty strong downtrend. Taking a look at the Australian dollar, we see that the market is also in a strong downtrend, and we can draw a fairly steep trend line here. That's a trend line. This is the daily chart of the Australian dollar. So we are looking, if we're looking for a swing trade here, and you're looking for a pullback type of trade, you could wait to see if the market is able to close above this 80-40 level, and is it able to reach up to this trend line, and then what you will do is to see if you get a signal near this trend line to go short, to head down further. The market could close above the trend line, and if the market closes above the 83 level, that could be very problematic for the bears, and could signal an end of this bearish move down in the Australian dollar. Taking a look at the Japanese yen, we see that the market is, after a very strong move to the upside between July and December, the market, although the euro was going down and the Australian dollar was moving downwards, we see that the Japanese yen has remained fairly range bound, and that's what tends to happen with currencies, is that once they have a strong move up or down, you could get a period of consolidation. And for the income system members, we will have made some pretty good money on this move late last year. That's taking a look at the British pound. This is the daily chart of the British pound, but what's of interest to me is the monthly chart, where we were speaking about this trend line. and the market is flirting with this trend line here. We have a weekly close below the trend line, but often what could happen is that you get a weekly close below the trend line and the market snaps back up to test the trend line, which is what is happening at the moment. Let's go down to the daily chart. We see the same trend line. The market came up, retested the trend line, is coming back down. What you could see is that the market just rallies off of this trend line because this is a pretty long-term trend line. It's not unusual to see the market go slightly above the trend line or slightly below the trend line. So I wouldn't classify this trend line as broken just yet. The market is flirting with the trend line. That's the terminology I like to say, flirting with the trend line. Okay, taking a look at the Canadian dollar, and last month the Canadian dollar really had a strong move to the upside, and it was almost difficult for some systems to catch this strong move because the move was so violent. But the Canadian dollar lost some. In January alone, the market lost some. The market opened at 116 and closed up at 127. That's an 11-cent move in a month, which is pretty strong. A pretty strong move in the Canadian dollar to the downside, and the US dollar to the upside. And this has to do with the fact that crude oil has been declining steadily, and Canada, being a commodity currency, saw the Canadian dollar being punished because of the decline in crude oil. So what is to look for in the Canadian dollar? Support at this time is at the 124 level. We have some minor support at 124. Taking a look at the 4-hour chart, we have some support at the 124. If we see 124 being breached, another support point is the Fibonacci retracement at the 618 retracement, which will be at 121.80, and the 50%, which will be at 122.99. How, as trend traders, we play the Canadian dollar is that it's in an uptrend, so we'll be looking for buying opportunities. At some point when you're trend trading, the trend will end and you will be on the opposite side of that trade. But until the trend ends, you are always looking for opportunities to buy the particular market. And when will the trend end? When you see this series of higher highs and higher lows stop. So you see higher highs, higher lows. Market made a new high. If it pulls back, where will this pullback end? And will it continue up, or will it pull back and start doing, let me just erase that. When it pulls back, will it pull back, try to make a new high, and start making a series of lower highs and lower lows? That's when we know a trend has ended. When the series of higher highs and higher lows ends and we start to see lower highs and lower lows. In the case of the Japanese yen, let's just go back to the yen. The market hasn't fully reversed yet because we have higher highs, higher lows. The market attempted to make a new high, failed, came down, didn't take out this low, and is now entering a consolidation pattern. It could break down or it could continue higher. So we'll just have to wait and see how that plays out in the Japanese yen. But a question I do get a lot is, how do I determine a trend? And how do I know when a trend ends? A trend ends when you see that series of higher highs, higher lows. Well, an uptrend ends when you see the series of higher highs and higher lows ends, and you start to get lower highs, lower lows. Let me just bring up an example of this that happened in gold. We see It's a daily chart of gold. Perfect example of a trend reversal. As you can see, 2009 higher highs, higher lows, higher highs, higher lows. Market came down. For the series of higher highs, higher lows continue, the market would have to come up above this high, but that's not what happened. The market came up, tried to make a new high, failed, came down, tried again to make a new high, failed, didn't go below the low. So this was acting as good support in the market. Market came up. This was acting as resistance here. Market entered a channel and then reversed. And let me just bring forward. Market reversed, broke the series of higher highs, higher lows, broke down below this support level, and then started to enter lower highs, lower lows. And at that point, you will be on the sell side of this gold market, because the prices are telling you now that the market had stopped going up. The market has now reversed and experienced lower highs and lower lows. So it's very important to be able to read the prices of what's happening on the market for clues as to the direction of the market. Okay, this is Beyond. Thank you very much for listening. If you have any comments, you can send an email beyond@asistrading.com, and I hope you have a good trading week. Thank you very much for listening.